All right, so Centroid's at 65.79. So Centroid's at 60. Happens to be the value area high. Yes, you think there's going to be downside here. I'm kind of favoring that downside. I'm a little biased down. I'm going to try not to influence my bias and trade what I see. It's only 9:35. Looking at the OptionsDepth chart, on gamma, we finally have some positive gamma in the bucks. VIX is down towards 24. The zero gamma line, which we pretty much rejected off right before market open, I think at around 8 o'clock, and then once again around 8:40 when Trump tweeted. So we rejected off that level already. Currently, we're floating around that centroid level identified by Alma at 65.79, which theoretically is where we find some balance. There's a short call spread at around here. Just gonna move over to the daily. 6,500 is that gamma trough, and you see that on the daily, on the intraday too. And there is a call spread around here. Short call spread, and right now we're kind of fighting in between. Charm is kind of bullish to some degree. It's ineffective right now. Not until the readings aren't really that great until we reach about 2 p.m. Hey Koshik. I took a pretty neat trade yesterday based off of the gamma levels on OptionsDepth. I thought it was pretty interesting because if you remember here, I guess I can show it to you. Yeah. So here, we were talking about that deep negative gamma level, and if we approach it, it's likely to blast off because, well, like we know with negative gamma, if price goes up, dealers have to buy too. That's essentially what happened. And I think there was also news that came out that just rocketed. So it basically saved my eval. I only got 20 points off of it because that was like my auto TP. Because I had just entered the trade sometime around like noon, maybe 12:10 ish, and just kind of let it ride while I went down to have lunch. And it was a good call. It's interesting to see, but it doesn't always do this. I mean, we could have easily have sold off given news, but just reading the price action, it almost seemed like it wanted to break out. Oh, and I only did it with the one eval, so didn't really put much risk into it because it was it would have been a crappy entry anyways. Yeah, I think it's a bit of luck. Like, yeah, we got to read the gamma, and how dealers are likely to hedge by buying futures if we buy into that 64.75 level. And so that, to some degree, that can be considered an edge, but we really needed something to push us above. So bit of luck too. I think it took about 15-20 minutes from when I entered for there to be some sort of tweet. I sent it to like the rocket to the moon. 66.44 could be drawn liquidity. Yeah, I agree with you. Just watching here. There's a bit of news in the morning that kind of set us off and got us to reject this 65.90 level twice. So I think one time it actually went up towards, yeah, the first time, which is like around 7.55. That was the top there. The price action, the SPX equivalent was around 65.87. So we basically rejected off what you see here as the 0 gamma level. So it's trying to stay in the negative gamma range. Because once you break above here, it starts to be positive gamma. Though all this here, like I would consider this like a band of like next to no gamma. Like you're talking very low readings, very little impact, but oftentimes you see price reject off these 0 gamma levels. Still hovering around Alma centroid here, which is where that balance is in hedging flows. She notes that markets are short put spread here at around 65.79 SPX. And spot needs volatility here if it wants to break through the 66.15 band. 66.15, I don't see anything from a breakdown by strike, but oftentimes her derivatives are quite interesting because she tends to view things from a volatility lens, and she tries to map out IV or implied volatility and realized volatility. But this is the first time we've seen positive gamma in a while, and right now we rejected off that line. Would have been a decent short. I was kind of biased that we would go down and potentially fill that gap. But I wanted to see something set up, and the best I got would have been a value area high rejection, which isn't good enough for me. But probably should have given it a higher probability rejection because of the 0 gamma line. We open at 65.70. The straddle of 43. straddle takes us to about 66.13. So the options in the morning at open, prices in a 43-point move. Let's see. Price in a 43-point move from the open, which is around 65.70. And I believe that takes us to 66.13, which oddly lines up well with Alma's 66.15 band that she sees. And then to the downside, it'll be also 43 points, which would take us basically to gap though. So the options chain, the at the money SPX, the at the money strike at open, which is 65.70, let's say, priced in a 43-point move up and a 43-point move down. So it's just something I like to highlight and keep track of, because that's what, I guess, the cumulative bet on the market to move is currently pricing in. And oftentimes we reject it or bounce off of it to some degree. Doesn't mean we stay within the range. Oftentimes, or not, I shouldn't say oftentimes, but there are times when the straddle is mispriced and we blast. Like if sometimes the straddle is pricing in maybe a 20-point move on either side, and we end up getting like a 40-point move, or sometimes a 60-point move, depending on what happens from a macro perspective there. Yeah, I think there's gonna be that downside. We're gonna see that downside. I don't know if it'll be slow or fast, but I suspect we're gonna do some consolidation, almost like a zigzag kind of pattern towards the gap fill. Ideally, the first move down will be fast and get a slight bounce, and that'll probably end up being a bit slower. Just applying to help tell the story, if you will. I often like using EWT, which is like Elliott wave, but it's more or less just a general target based off of Fibonacci's. So for instance, I don't know, you have like a 5-wave move here. Let me see. One. So here's your 5-wave move, and then after a 5-wave move, you end up getting a ABC correction, something like this. And in theory, it could come down quite a bit lower. Just something along those lines, if I had to draw a rough path. But it just gives me a general idea of what the market could be doing. It's not always correct, especially on a lower time frame. But I kind of like being able to predict a narrative to some degree, and EWTs helps me with that story. And oftentimes you see a lot of corrections that kind of look like this ABC pattern, the zigzag. They come in this form, and then they also come in like a flat kind of format that looks like this. And then sometimes you can even get like a wedge style consolidation or correction, and that's EWT also from, but from a TA perspective, everyone just references as a wedge for consolidation. Yeah, I want to short, but the risk is just way too large because I didn't get a decent entry. What does your GEX spot say for from a gamma perspective? Are we in positive or negative? Completely positive? Oh wow. Yeah, this is like the first time I'm seeing positive in quite some time. Um, from an OptionsDepth gamma chart perspective. Even then, like the price action is staying under the or within the negative gamma range from OptionsDepth perspective. Here, let me switch over again since I don't need the chart right now. That way you can see the OptionsDepth chart. I think it's a little bit more useful. Yeah, we're kind of hanging out in between these call spreads here, which is pretty supportive, or not supportive. There's a bit of resistance there between the two, and it slows the market down a little. Went along below 9:07 a.m. lows, but we have a 10 a.m. news. Yeah, I hate when that happens so much. Oh yeah, we got pretty significant news. The US ISM manufacturing PMI. Yeah, I'm probably gonna hold off. You wanna long the 907? Oh yes, yeah. Okay. I see what you're saying. SMT. Oh, I see. Yeah. I'm seeing it on the 5-minute, 10 to 15 minutes. I'm bear biased today towards the gap fill. I'm trying not to let that influence my trading decisions. I just want to see something set up. That 15-minute candle, I mean, it's a pretty massive candle. But it's still sitting under the 15-minute ADMA for me. So I normally would want to short that. But only if I'm able to get like a decent retracement into that wick. And I hate taking a trade before major 10 a.m. news, similar to you. We're trained from the same people. I think it's just good practice. Pretty sizable put spread that's that was placed at around the gap fill here. You can see it. It's about 8,000 positions. The start of the day did not have any positions, but this thing came on probably after market open. So in theory, things should slow down at 65.30, which is the gap fill, if we should head down towards there. And whoever put this on would be attempting to make money off us holding this level, holding above this level by the end of the day, since it's an ODTE expiration. 24,289 upside target. 289, 28. I'm not seeing the 289 as clearly. I do see that 246 area, but that's really just the high day or high overnight. We have a decent negative strike cluster here on the breakdown by strike with the 65.80 top, 65.80, 65.85. I think that's roughly the high day after market open. So it's a high within the last half hour or so. And then a bottom at around 65.55 for that strike cluster, which happens to also be the low of the day. Interesting to see. And it's just starting to form. It used to be the 65.70 and 65.65 were dealer long strikes, which is generally has like a slower effect on the market, or a positive gamma effect, if you will, locally. But this whole 6580 and 6555 cluster, that almost a 25-point cluster, it all has like negative gamma influence to it. Here's the news. ISM manufacturing PMI came in better than expected, higher than expected, I guess. But it's only like slightly higher. US ISM manufacturing prices paid is also high. Employment index went down. This all kind of looks like it's bad news. Higher inflation, lower jobs. And we're doing nothing so far. VIX popped actually higher than its high, which is interesting. That's a odd divergence to see between VIX and SPX there. So at around 905, which is the local lows, VIX popped up, and then VIX just popped up again at 945, and it exceeded the previous VIX high, which was at 905. That divergence is a bullish, well, it's a bullish indicator so far, but oddly slow. Iran will welcome Russia as a mediator. Just not seeing anything here. I want to try a short, but I think that's my bias speaking. And the risk is just way too large for my liking. Like if I'm wrong, we hit your draw on liquidity, I'll get owned. Seemed like yesterday it took 9:30 a.m. lows and went up. Yeah, yesterday was quite the rocket ship. I'm definitely paying attention to this dealer negative strike cluster. That's what I'm watching really closely. I like to play the edges of those if possible. I guess they will use same playbook for the rest of the week. Yeah, and I think we only have the short week, right? Like we only have tomorrow, and then we got Good Friday. Two-hour wasn't nice. 2 hour, 1 hour. Let me see the 4 hour. 4 hours, a bunch of top wicks, but it's just approaching exhaustion. I can't read that as anything right now. Let me see a higher time frame. How that looks. ES is at a higher volume node. High volume node. Oh, interesting. NQ is also at a high volume node on the daily. We're basically hovering around in it. Good Friday with NFP. That's epic. That probably means it's a good NFP, right? I gotta remind myself not to watch any news today or expect any news that I see to be fake. Because I always get it faked out on April Fools. Yeah. Damn, that's gonna be fun. So we're gonna get some nice overnight movement, and then they'll chop around for us during regular trading hours, I guess, tomorrow. I'll show you another gamma chart, and this is how, I guess, the big firms track gamma. SPX market maker net position in gamma for yesterday as a 420 sticky strike assumption. I barely know how to, I don't know how to read this, but you can see all expirations. Looks like it's in black. Today's expirations in blue. Spot reference looks like it was around 65.30, probably yesterday's close, I guess. So now we're approaching like 6,600, probably up here. So here's your, I guess, gamma trough, and then here's your gamma peak. And then this is where speed slows down. And same up here, it's just like typical derivatives, I guess. But yeah, I don't know how to read a gamma chart that looks like this. I always rely on guys like Fall Signals. He says, take a look at the chart here. It's a deconstruction of the gamma profile across the tenors. Importantly, much of the tension produced by negative gamma will resolve by way of expiration after today and tomorrow. Seeing that at all. Oh, I see the April 2nd has a lot of negative gamma around this range here, but it's positive gamma today. So I wonder if what you're seeing on your on Gexbot is actually more related to what you're seeing here. Like what's the value that you're seeing for your positive gamma? Because guess this is like approaching 6,600. You might see 2 billion, which would, I think, the readings that you normally see are like between like -3 to +3, right? And then tomorrow, I wonder if that reading would be like closer to like -1 if we're hanging out at around 65.30 ish. Actually, let me check that YouTube. Yeah, NetGex Looks like it's around 1.2, 1.29. I'm not sure. Not too far off what we're seeing on this document from UBS. And maybe your way, the way that GexBot is calculating gamma is more closely related to how this to how like these market or these big banks do it. Tomorrow will be the tell, depending on where we're at. So if we're at 60, if we're hanging out around 64 to 6600, in theory, we should see a negative GEX reading. I think currently it's reading 1.8, and we're hanging out at around 65.72. Should be somewhere around here, right? 65.72. This is the center. Yeah. Yeah, it must be. Obviously they're showing NQ, but it's pretty close. I'd be curious what they show tomorrow. Oh, that would be so pretty. And I'm definitely going to kick myself if I miss it again. So you're right, I got to pay attention. Yeah, I didn't get to watch a doc today. I'll check them out later. I don't want to be too distracted here, especially if a trade presents itself. It's kind of SMTing here. Between ES and NQ, lower time frame, 5 minutes, 5-minute time frame. YM is causing ES to kind of be red here, a little bit more red than NQ. Let's see what it shakes out, how this candle shakes out on the 5 minutes. I kind of want to see the 15-minute. United States will be out of Iran pretty quickly and could return for spot hits if needed. I love that it says Washington, April 1st. I'm the worst. Obviously, I don't think that's a April Fool's joke by any means, but this sounds very spot on with what he would normally say. last year around the same time we made the low, April 7th. Yeah, I noticed a lot of people are telling me about these about this pattern that they're seeing, and a lot of them are posting about that 2025 correlation. $30 points of risk if I wanted to short here, but I don't see anything. There's no indicator. There's no indication that we would come down. Bit of SNT, but yeah, I think it's gonna resolve like to the upside on ES. All right, there goes NQ. Question here is whether or not we'll break into positive gamma. That was close enough to the that basically wicked off of Alma Centroid right now. 6579 on SPX. Really close to 6580, that cluster. I would have liked to seen a little bit higher. And maybe some SMT signal. That's an interesting 5-minute close there. I might give this one a shot. Oof. If we can, it hasn't done anything. Oh my goodness. I like the NQ doji that I'm seeing on the 5-minute, and I like the SMT there to some degree. I think I'm gonna try it. I don't love it, but yeah, it's just not pretty. I also want something on the 15-minute to tell me to short. But here's just so you can see, there's roughly where I entered, 66.14ish, and just market entered. And then the 10-point stop loss is like something that was just pretty standard. It's part of like my ATM strategy on that I built on or that I modified on NinjaTrader. And I like your draw on liquidity lower on ES, looking at the same thing, but I really think that we can go down quite a bit lower than that. I just don't know that I'm willing to risk additional profit for that. Like, I would want to see the gap though. Yeah, that's the thing. Like, I don't feel particularly great about this trade, especially based on how slow the market is currently. And we could go up a bit higher, like towards the 9 or the 8:30 candle, or depending on if you're on the 5-minute, 15-minute, but like that 8:40 spike candle. I feel like we can still go test that. But I'm in now, so I'm just gonna hang on to it until the stop loss hits or the drawn liquidity. So I'm a sucker for that 5-minute candle because we had a nice wick up top. Or on NQ, it's a doji, and you can argue that on ES, it's a doji too on a 5-minute. But one thing I like about it is that it was a high volume wick. But I won't take all of them, I must say, because oftentimes there are fake outs. In this 15-minute, I would have wanted to see this 15 and 30-minute close favorably, but this looks like it's going to be more upside. I'm expecting my stop loss to hit. Just looking at the 15-minute candle and the 30-minute. That cluster is still there on the breakdown by strike. Nothing's really changed. And we're showing the 1020 update right now. 6600 is the largest dealer positive gamma level. And it's been building. So there's enough people that are shorting volatility there, or what they're doing is they're collecting premium at 6600. So if we do go up there, we'll probably slow down around there. Yeah, my stop loss is going to hit. Brutal. I'm just not willing to take that massive risk to the upside, which is why I kind of place my stop loss on that 5-minute, top of that 5-minute candle. But yeah, the 15 minutes not playing game, 30 minutes still suggesting more upside to me. At which point I was really just hoping the SMT would hold that I see on the 15-minute chart. The 1-minute chart looks quite disgusting here. Of course, now it's going to go. Now I got to decide whether or not I want to re-enter. I don't think so. It's trying. And this is very tempting. These wicks kill me. I think that's twice now that it did that. in this week. I tried MES on my live account, so hopefully that ends up panning out. I think it's finally gonna fold here. Yep. It's brutal. Yeah, I know. Oh shit, man. Fucking the market hates me. I did get one MES off my live account, so hopefully it goes towards that draw of liquidity or even lower. I'm gonna take profit at the gap fill on the one MES, but let's see if I can. Yeah, the thing with the SMT, I had such a crappy entry, or not a crappy entry, but my risk should have been like closer to 15 points rather than like the 9 points that I've set it at. $65 AES is a good draw on liquidity. Yeah, I like the 88. I'll go 90. If I can get another re-entry here. Or maybe it doesn't go. Let's see. Still just chopping around. I don't know if I want to re-enter. Yeah, still nothing. This is a chop day. Is it worth re-entering? A minute left on this 5-minute candle. Yeah, I'm not loving it. I don't think I... Holy smokes. What's happening now? Is there news? Wow, this is just like straight chop. And it looks like you're going to get the SMT at the highs. NQ looks like it might. Yeah, I don't have any indication of where this would go. This is nuts. It's trying to stay in the negative gamma though. Oh, that's interesting. How do you mention that it's a tight day today? Oh, the depth view. Yeah, give me one sec here. I assume you mean this table. Positioning, right? As opposed to gex. So this is the with no intraday updates. So this is how it looked like prior to market open. If I adjust that, let's give it a second. Ooh. What in the world? Why is it still loading? Oh, there it is. So it should slow down. If we're gonna head up, it's gonna slow down around 6,600. $66.05. And then a top should be placed at around. It's interesting because remember I called out that put spread well below here, like 8,000 positions or something. Hey, where did it go? Oh, they closed it. 65.30, 65.20. It's gone. And it looks like it's a call spread now that they place 9,000 positions. And their call spreads at 66.05 and 66.15. Yeah, good patience you're showing. Great patience. So that'll take us about, I think that's about 20 points from here. 20 some odd points. So that should take us to 6,600 where things slow down. Yeah, that should be good. Yeah, and the 15-minute and 30-minute chart all look like it's an up move. but nothing about today is pretty. These are the kind of days that generally kill me. If I can't predict that it's going to be slow and choppy like this. So it's very interesting that that Doc mentioned that. $66.00, $66.05. This is what you're seeing here. It's funny that the put spread went out. I don't understand why that would have happened. 66.30. Or 65.30. Yeah, it totally got wiped out. They must have closed. I don't think NQ took the highs yet either. $9.40. Yeah, I'm hating myself for taking secondary trades, but I like your 9.40 short too. Mainly because it lined up with the 0 gamma level, which is like a perfect rejection. Mind you, it had already rejected the first time. Pre-market. So that would be the first time it was hitting during regular trading hours. Man, but today is nasty. Damn, it missed you by 1 point, eh? Ugh. Such a pain. More put spreads are coming in. Or sorry, call spreads, I should say. So they're all collecting premium to the upside. 66.05, 66.15 was one trade, and then 66.30 and 66.35 was another trade, I think. So there's definitely a cap on the market based on positioning. Now we've entered the positive gamma intraday. NQ is about a sweep. Taking a sweet time. Holy smokes. We've been in a 30-point range so far, where the 5-minute wick's like half the range. The shorts and call spread here. Yeah, it was interesting. I think one of the things that I was talking about this morning was the VIX basically diverging from ES. The VIX highs was diverging with the ES lows, because VIX went on to make a higher high at 9:45 and ES did not make a lower low. And normally that's like a bullish indicator. So far, I traded against it. And VIX is now at the new low of day. And we're talking about, we're including the overnight levels on the VIX. Gravitating right towards that 6,600. So you're going to get it. You're going to get that 6644-ish. NQ just swept, or took out its high day. gravitating right towards that 6600, 6605. I think normally price action generally gravitates towards that dark blue zone is what I typically find, especially on like choppy days like this. But it's a vol crush kind of day. Oh, I'm not sure when you got disconnected, but um, I think the only thing that I was mentioning was that that naturally you get a nice drift into that positive gamma strike at 6600 and 6605, barring any real flows. Like, well, you kind of have like bullish flows right now, but when you're in positive gamma, you tend to have what dealers short against the price action. And when dealers short against the price action, it's generally pretty slow. So the positive gamma indicator that you had, it's actually pretty good. But it is floating right to that high day, towards that 6600 on SPX. I think the reason why I stopped using ICT, like, can't say that I stopped completely. But I guess before I primarily used it for most of my trades. But as for why, I think it's because I find that, well, I was using it on the 5-minute, the 2022 model, and I use it on the 5-minute, and oftentimes I like the silver bullet strategy or the unicorn. To me, they're all kind of like the same. It's like you take out some liquidity level to the upside, let's say, and then you do change of character and or break of structure, and then retest the break of structure. And when I played those, I guess I just didn't find too much success with it, especially with the prop firms. Maybe if I sized down, it would have been good. Oftentimes I end up trading ES instead of MES, and the stop loss would have to be pretty sizable in some cases. So I didn't survive. Like, a lot of accounts didn't survive when I was trading that. So then I knew that where I entered mattered. And one of the guys that I actually we were going through ICT together, and we were going through volume profile together. He dropped ICT first in order to pick up volume profile, and I loved his entries. His entries is like, he was wrong from the right place, which meant that a lot of times he was, I guess, knife catching or shorting at the highs, but it was at like a very critical spot, and he was able to have like a pretty decent trade in terms of profits normally. But one of the issues with that is, on a trend day, you're constantly trying to short a high and you get blown out. And that's what I found. And but I guess the ICT way, I guess everyone kind of mentions this actually, is to look at the higher time frame, to give yourself a bias on the higher time frame. And everything about, like for example, today or yesterday was like a solid green candle pretty much. I was expecting some sort of like retest of that candle to some degree, on the 1-day chart, but that didn't really happen. It kind of just saw a bottom, and I think it opened and just moved up without retracing for the most part. And in theory, seeing a candle like yesterday, we should have some follow through today. Whether you see it from an ICT perspective or a volume profile perspective, it really doesn't matter. But like a candle like yesterday, normally you see decent follow through today. So having that context in mind, which is the benefit of hindsight, I probably wouldn't have shorted today. And on top of that, we got that VIX divergence with ES. But anyways, that was kind of my roundabout way of saying why I don't trade solely ICT. I do use some of his concepts. And being strict with the entries is a great idea. And a day like today, I probably should have been using MES rather than ES, given the chop nature, but also if I was wrong, it was going to be a pretty large stop loss. But yeah, we're headed right to that drawn liquidity that you identified, which is the high of day, right? And NQ and ES is not diverging, but NQ hit that high day first, and ES is just following. And YM hasn't hit it yet either, which is likely why ES has not hit it. But yeah, I would anticipate a run towards 6600, 6605 on SPX, just based on the nature of today's price action. Sounds like you don't really use ICT anymore either. Curious to hear why you might not be using it, or just using some concepts. Yeah, I agree with the volume profile part. Yep, exactly. So like one of the strategies that I do like to play is when we hit a sweep or some sort, we we often mean revert back towards the POC, and that's a really nice trade. And then oftentimes secondary moves comes off the POC too, but that depends on where the draw is, right? The draw and liquidity. But yeah, I do like, I definitely reference the value area high and value area low also for the session. And then one of the things that I also add is like on a 4 hour, 8 hour time frame is I carry the session volume profile POC, the session volume profile POC through until it gets hit again. And oftentimes it becomes like a nice spot where you may consider a rejection of some sort or a pullback. I really like that too. But yeah, seeing things from a volume profile perspective, I find it's much better. Especially when like I used to short fair value gaps randomly. And then I realized after after learning volume profile, I realized that oftentimes the fair value gap might line up well with maybe value area high for a short, and then it ends up being a perfect short from that perspective, right? And then there's a few other like maybe 5-minute fair value gaps in between that has almost no significance because it doesn't line up well with anything else. Previous day volume profile, previous 5 days volume profile works best. And regular trading hour, yeah. Yeah, on the hourly, I definitely have like a weekly volume profile that runs for the week just to kind of see. And then I have like daily levels, like a daily volume profile that I also run just to kind of see where, like, I guess from a higher time frame perspective, where these high volume nodes are and where like price action likes to kind of hang out. And oftentimes we kind of bounce between nodes. So if you have like a swing trade in mind, they're kind of perfect using volume profile. Like I think I was showing you NQ the other day. And yeah, it was this NQ snapshot here. That was from yesterday, showing where we bounced off of, which happens to be like an edge of a node. In terms of options Greek, I don't know that I can explain this. Like, I know we were roughly where the negative gamma meets positive gamma. So from that perspective, it was like low gamma. So I kind of expected to kind of hover around that balance for the most part, but oftentimes like there are other drivers that could cause like a negative flow. For instance, like, I don't know, who knows, a Trump tweet, but general trend should have been up today. Just looking at the daily. As for the chop, I think it was just one of the things that we were talking about was the call spread that's here, 6580 to 6600, and that's prior to market open too. So that was like as of last night. The positioning on SPX was showing this call spread, and generally that slows things down when customers are selling volatility and or collecting premium through selling options. So speed, I kind of have a little cheat sheet here. Give me one sec. See if I can share this one way or another. Maybe you can screenshot it. Where did it go? Here it is. Yeah, I have a little cheat sheet here, and speed is a rate of change of gamma relative to the spot price. So the slope of the gamma curve. And one of the things that, if you think about it, let me see if I can show you the 3D gamma chart. So if you see from a rate of change perspective, if you're looking at gamma peaks and troughs, which right now it looks like we're just kind of climbing through this. Hang on one sec. Let me know once you got a screenshot, or if you want to screenshot it at all. Wait, one sec. I'm going to show you this, the 3D chart. So if you take a derivative of gamma, you know that the peaks and troughs are, the speed is 0, right? Just like if you take the tangent on any trough or peak here, you'll get 0 speed. So speed here, I think, is positive, but it's slow to the upside. But I don't think it like oftentimes you hear guys like Vol Signal say that if we're in positive gamma and we have like a massive dealer long, which is a customer short, if it's like an uphill battle, right? And I think you mentioned this too a few days ago, if not last week. But if you're in positive gamma, you tend to play reversions, because as price goes up, dealer hedging is actually in the opposite direction, right? But right now, price is only pushing up. Dealer is hedging, which is likely why you're getting this choppy kind of move up. Like, dealer has to sell every time that the price goes up. So it's like an uphill battle. But oddly enough, they end up being really nice these blue areas end up being very nice pin levels. It's like where the market kind of attracts price action. And you often see that with charm. So charm here is positive. So it's when it's yellow, it's suppressive, and when it's blue, it's dealers are buying. So it's kind of odd. Like on gamma, you have dealers that are shorting to balance, but then from a charm perspective, they are buying. So what's the net, right? But I tend to pay more attention to gamma intraday, and then charm I only really pay attention when the value gets like above 30, above 50, which is around like 2 o'clock or later. But I'm pretty much limited to gamma and charm from an intraday perspective because that's all OptionsDepth has, and I believe these are the easiest to model. Vol Signals, who's a market maker by trade, he created his own version of this called VS3D, and even he only has the gamma and the charm. I think he has Vanna in the works, but I don't believe he mentioned how to use it yet. And I think they have Vanna here too, but based on how it's calculated or how it's modeled, I haven't found any real use for it. But yeah, just going back to that Greek chart. This is something that I basically put Alma's reports into a like AI notebook LM. It's basically ran by Google, or it's a Google product. And Notebook LM doesn't really hallucinate as much because it only references whatever you input into the system. So I've put all Alma's reports in there and her educational content. And one of the things that I asked it is for a Greek cheat sheet, and this is what it spat out. So one of the things when she talks about speed all the time, and one thing she says today is like the speed profile is net positive, but and she marks 66.15 as the level that separates net puts and calls from each other. Above this line, market can calm down. Below, tension remains. That's an SPX level, 66.15. But I think one of the examples for speed, it says here, the cheat code for tape reading, that's according to Alma. And Alma's proprietary metric, it reveals liquidity structure and the realized volatility smirk. It shows where dealers are short gamma versus long gamma relative to the current price. And the key dynamic is net negative speed, dealers selling vol in both direction, which slows everything down, right? Which is why I mentioned these call spreads. And every time I mention these call spreads, generally you can expect if they're short call spread, that means they are shorting volatility and they're collecting premium by selling volatility. So if they're short, then they're expecting the market to hold below that call spread that they have. So it has a positive gamma effect, which is why it suppresses momentum. When net speed is positive, volatility is expected to expand, favors momentum. Now, when Alma mentions like the speed profile is net positive this time, like I have no idea whether like how positive it is or how or like how close to neutral it might be. And when she says net positive, like does it change somewhere like below maybe 65.80? Maybe it's net negative, and but I wouldn't know that because we don't have a chart. And ideally these guys like OptionsDepth and vol signals, they'll come up with something that can portray that on a 3D chart, or on any chart really. Even a 2D heat map would be ideal. But Alma has her own platform that she built, but it's only for like, she does a lot of coding, and she provides a lot of this information, but it's through her lens as opposed to teaching us how to use the product that she has. Like she doesn't give the product out because that's her edge. And it looks like she doesn't really want to build a platform either, which all of us kind of want her to do, and we'll sign up for it because once you have like the Greeks that Alma has, it would be ideal. Yeah, hopefully that cheat sheet helps to some degree. Excellent. Okay. Yeah, often there's so many darn Greeks, and there's many different ways to say certain things. Like Volma, I believe, is also Volga to some people. I have no idea why, because I'm pretty new to it too. Like, yeah, it's brutal, right? Price action's so choppy. But I guess that was to be expected, because when I was looking at the daily, I saw these call spreads here. And it's really just hugging like the 0 gamma line from the daily perspective. Obviously, things have changed intraday. But I often find that the daily level without the intraday positioning changes, the gamma levels hold best. And even Alma was saying something very similar. And so did vol signals. So all these guys who are like pro level, Gamma users, they like it based off of like the 12 a.m. update or the previous day positioning at the end of the day. But yeah, the that call spread you can see at 6600, 6580, and we're just hanging out here. And there was another one down there at 6550, 6560. That would generally kind of slow everything down. And we just kind of hung out within that 2 call spread range. And you can tell it's a call spread just based on the contours of this. So anytime you see like 2 contours meeting up in a daily level, you can probably tell that that's some sort of call spread. I'm probably gonna have to watch Doc and see what he said about this morning, because it sounds like he kind of nailed it, being in a tight range. And I wonder why he expected that. So I kind of want to add that to my arsenal too. He's pretty seasoned. I think he's been trading for quite some time, but he's using a lot of the same platforms that I've been using. Have you read Trading in the Zone? Yeah, actually, I have it. I think I listened to the audiobook first, and then I got the book, but I'm only like a quarter of the way through Trading in the Zone. But yeah, I think it's a great, a very good book to read. Kind of flipped my, I guess, the way I traded, and I tried to not have too much of a emotional response and just play the stats. Like, if this happens, like, you should always take it and not let anything external impact that trade. And if you take the loss, just take the loss, and it's part of the statistic, right? But yeah, that's one thing that I kind of took away from it. Because back then, when I first started trading, like, the previous trade would always impact my current trade, and I had no way to isolate it. And this kind of just put it into perspective for me, to basically say, hey, you should play the statistics. And if your stat is 55%, 60%, you're going to be losing 40% of the time, which is a lot. 4 out of every 10 trades. And you could see those 4 in a row. So the idea is not to let that impact your trade, because when the time finally comes and that trade is going to hit and you don't take it, like, it messes up your entire stat, right? But yeah, that was one of like the first things that they talked about in the book. But I think Mark Douglas does a lot of like YouTube, or sorry, I don't think he personally does it, but there were a few guys who uploaded his content from way back when. I'm gonna see if I can find it for you. But he essentially runs through the principles of his book in like lecture form. If you I tend to learn better from like videos and visuals. Audiobooks are a little tough for me. I'll listen to podcasts, but I don't often have the time, or make the time, I should say. I don't often make the time to just sit down and read a book. All right, so the Mark Douglas stuff. It's called Mark Douglas Part 1, and it's from a YouTube. Let's see. Yeah, you get it as soon as you type in Mark Douglas Part 1. And it's a 4-part series. And he basically just lectures you about the principles of his book for the most part. As for any other books, I hated going through The Intelligent Investor by Benjamin Graham, but it kind of teaches you like the Warren Buffett way of investing for longer term value stocks type of thing. I think to some degree I follow that, but I would probably suggest like getting like an AI summary of that book because it was such a brutal read. But it's been a while. Like, I don't think I've gone through that book for like 10 years. I don't disagree with you saying value investing is dead, but so you have like all these momentum stocks that are just like pumping, right? I think value does, like, everything kind of comes to roost at some point. And value investing, for instance, a lot of the oil companies were just absolutely destroyed. And it took a while for them to really pick up again. And they tend to kind of run through cycles. But Warren Buffett was buying Oxy, OXY, for since like 2022, I believe. Check it out. Yeah. Pull the drawing up. Yeah, he's been acquiring since like 2022, maybe even earlier than that. But yeah, and he's just been buying up, and finally like what Oxy is like moving up officially. And it's just part of like the cycle. So if for instance, and this is one of the reasons why I watch a guy named Chem Karsan, and he has a decent video out right now. Let me see if I can find it. It's the latest from stock. Well, actually, if you go to, let me see, videos. Shorts, videos. Yeah, if you search up stock twits. And then click on their channel. Let me see if I can find it. Yeah, under their video section, it was just the one that was posted 19 hours ago under stock twits. Stock TWITS. And it's an interview with Chem Carson. And for the most part, he kind of opened my eyes to the cycles in trading. Now, he's probably just reiterating a bunch of other things that we probably already know. Yeah, Chem Carson, exactly. That's the one. So when you have like a moment, it's always nice to kind of go down his rabbit hole. I think a lot of people kind of stop following him because of things he's saying on Twitter. That they're starting to be very polarizing and very conspiracy-ish. But if you just listen to like the way he speaks, it's just interesting how he sees the market, and he's the reason why I sought out like a vol signals to learn the market making side and to learn the gamma side and the positioning and how it affects everything. His tweet about Jan 13th made headline. Interesting. Yeah. He says a lot of things. One of his latest stock picks. I'm gonna say like it was a few months back, so it's not his latest, but he had suggested buying into ZIM, which is Zim, and it was insider information that he knew or something. But I was like, you know what? I like the chart. I like the way it looks. I can get it at $14 in November. So I got it at $14, and that thing doubled. And I sold before it doubled. I sold like once it hit about 22. I think that was roughly my target. And those who held saw a buyout, and some company was acquiring Zim, and it was just interesting to see that he suggested we get into that stock. Now I find that he's always just trying to provide information for the average, the average non-Wall Street trader, and he wants everyone to kind of like protect their portfolio. That's how he's kind of started to educate people from that perspective. And he talks about things like seasonality, but he explains why seasonality happens, like Feb OPEX, and why that's always so weak at around Feb OPEX. Like it's often where you start to see the third Friday of February is often where you see the market begin its decline for the most part. And he basically taught me the OPEX cycles and how the quarterly OPEX works. So like every March, June, September, and December, those are considered major quarterly OPEX, and there's a lot of funds that have to manage their portfolio and or hedge and restrike and readjust their collars and things like that. And oftentimes in the last month, so in the month before, the quarterly March OPEX would be February, you get some weakness. So the May is another time right before quarterly OPEX. Like he always talks about sell in May, go away. He mentions that everyone talks about sell in May and go away. And the reason why sell in May goes and go away happens is because of the quarterly OPEX effect that normally starts the previous month, which would be May. If you're talking about the June quarterly OPEX. And then you have another one in the September quarterly OPEX. And guess what? August is seasonally, starting in August, you generally start to see things seasonally weak. So when the market is seasonally weak, that's when things generally play out. So if you go back and just look at a few charts, you often see that the seasonality that everyone talks about, like August, people come back from summer break and people go back to work at Wall Street around like August, September, which is why you often get a decline. And then same thing with Feb OPEX into March, you often get a decline. But yeah, it's I used to follow him more religiously when I was learning that stuff, and then now he just he provides other information like I think, well, both him and Alma, like Alma just reminds me more of like someone who no longer works in as like some financial advisor. So they're no longer, Alma's no longer tied to any agreements that she might have with these big firms that she would work for. So she's able to kind of just shed light to the average retail trader on what's kind of happening and what people on Wall Street look at and what these gamma levels are, what these other Greeks mean, etc., etc. But she's shadow banned on Twitter because of the posts that she makes about the war, and she like predicting that the Iran war would happen sometime in Q1, but she was predicting it since November, I guess, and a lot of it kind of sounds like conspiracy, but it helps her navigate how the year will look, and she's able to predict these things. Like one of the things that Alma was talking about was a decline that was likely to happen around like February or something, but that decline would get much worse around April and May, and after that the market would buy up or consolidate into the summer, and then around August and September will sell off again, and that will be the big sell off. And funny enough, if you listen to that Stock Twits with Chem Carson, which was an interview done yesterday, Chem basically follows a very similar timeline, and he thinks now he believes in that we are in a I guess a populist period, which is normally like an inflationary period, similar to like the late 60s to the early 80s, and primarily all in the 70s. And he believes that that's a playbook that we should follow. And one of the things that he notes is during midterm years, we decline somewhere around like 20% minimum up to 50% maximum. And that drawdown is just a drawdown. It's not like we'll close to end the year at 20 or 50% down, but that's his playbook on the midterm years. And this year we have the midterms, right? So one thing that he also states is during what do you call it, election years, that's where a lot of a lot of the incumbents, they try to print a crap ton of money, and they try to support the stock market and show how well that their party is doing going into elections, so that way it would benefit their vote. I guess they would get the people's vote. But one thing that Chem said was that during election years, you get massive moves, like 20 to 35% up type of thing on average. And I think if you go back, you can actually see that too. And then the midterm years, 2022 was a midterm year during a populist period, and you kind of get wonky price action. 2018 was kind of like wonky too, I believe. If you go back and check that out, I think it was like pretty much a flat year, where you get like a double bottom, double top, or something like that. So now we're in 2026, and also a midterm year, and you're getting a pretty decent pullback. But yeah, I generally follow his overall outlook, his quarterly OPEX cycles, so option expiration cycles, and then his monthly OPEX cycles. And then I get Alma to kind of like feed in the details, because Chem is still a financial advisor. I think he runs like some sort of fund called Kai Wealth or something like that. And so he's not allowed to say a lot of things, and he's not allowed to, I guess, provide financial advice. Anyway, sorry to go on that rant there, or not a rant, but yeah, off topic. But give them a listen, or give him a listen, kind of see if you like it at all. But it just helps kind of like paint the bigger picture on how the markets move, I find. VIX is down to 23.6. It just continues down. It's amazing. I kind of wanted to pick up puts into June expiration, and that's suggesting that we may get another down move towards like 6100 or something. And I was hoping to get puts and swing out to June above 6600 SPX, and we're kind of there right now. But I wanted to see VIX under 20, which I don't think I'll see. But yeah, I think I found Chem Carson at around in like 2022, I believe. So I've been following him for a little bit, and that's essentially what started like my research, or trying to find people, and my education process for Gamma. We're in that dark blue zone. 6600, 6605. And I can't imagine it break above 6615. I think we're likely to fight. It's hard to say. Straddle highs at 6613. Yeah, I would think like we get a slow rejection off 6615 around there. If I had to guess based on the data that we have. Yeah, oftentimes I have that Mark Douglas part 1 video. I have it on in the background just to kind of listen to that, and anytime that my psyche's all kind of messed up, maybe I blew too many evals, I would listen to that and kind of refresh my frame of mind and my perspective on trading. Any other books you're reading or checking out? Videos that you're watching that are educational? Oh, SMB Capital. Yeah, they're pretty good too. Yeah, they're always trying to sell this like $3,000 course of theirs. I think it could be more because I they say like it's like 50% off or something like that. But yeah, they always try to sell that course of theirs, but their content's pretty good, I find. And I like that they can use like very simple technical analysis trading strategies like off EMAs and show how that can just work out. But their stuff is pretty good. I like their content. I don't watch it all the time though. Yeah, I might have to brush up on their videos because I feel like my trading's been pretty off lately. I had to guess, it's going to be pretty sticky around here. All right, Koshik. Sounds good. Yeah, I'm probably done for the day too. I'm not going to mess around with this. Don't got a good read on the market today. Take care. Good chat. Thanks for the chat.